And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week, private equity giant Blackstone has made significant move in the UK hospitality sector, acquiring the popular hotel operator Village Hotels. Blackstone announced its acquisition of Village Hotels, a prominent British hotel operator known for its 33 mid-market hotels across regional cities and suburbs in the UK. The financial terms of the deal have not been disclosed, but reports suggest it could be valued at around £850 million or approximately 1.1 billion US dollars. Blackstone's recent ventures in the UK leisure market include the acquisition of Bourne Leisure in 2021, which operates the well-known Warner Hotel chains. This acquisition by Blackstone marks a strategic expansion into the flourishing UK hospitality market, aligning with their broader investment goals. Also, on Follow the Money, the Federal Reserve had just released its annual stress test results, revealing crucial insights into the resilience of large banks amid economic turmoil. The Federal Reserve unveiled its stress test finding, indicating that major banks are well prepared to withstand severe economic stress despite higher projected losses compared to previous years. The stress test stimulated a severe global recession with significant declines in real estate prices and a spike in unemployment, projecting hypothetical losses totaling nearly $685 billion. The nearly $685 billion in loss include $175 billion in credit card losses, 142 billion loss in losses from commercials and industrial loans, and nearly 80 billion in losses from commercial real estate. Despite these substantial losses, all 31 banks tested remained above their minimal capital requirements. Increased credit card delinquency and riskier corporate loans contributed to the higher projected losses seen in this year's stress test. In addition to the stress test, the Federal Reserve conducted exploratory analysis assessing banks' resilience under different funding and trading book stresses. These analyses examine scenarios like rapid deposit repricing and trading book shocks from hedge fund failures. This comprehensive stress test by the Federal Reserve provides critical insights in the banking sector's readiness during economic downturns. That's all for Follow the Money this week. Thank you for joining us. Join us again next week on the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly trading series where we reveal the secrets to achieving consistent weekly returns in a fast paced world of day trading. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams one week at a time. Also, we love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets, find consistency, and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet should have access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market taking one trade a week, using one model, risking no more than 2% of your equity, looking for a 1 to 3 risk to reward. So you're risking 2% to make 6%. We had a total of 4 trades this week for a potential return of 8%. It's important to know that everything we share here is how we trade at I'm the Trader. But before we dive deep into this week's trade of the day, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader must have in their trading to survive and thrive in the financial markets. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from 3 things. 1, understanding the market and how it operates. 2, having one trading model that has IPTA signatures. 3, having a plan and process that you follow every single day. Successful trading is boring. you're doing the same thing over and over again. This is the 3-step process I use to take trades weekly. Step 1, condition. This is based on the higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, stage, because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. A low free nugget, free of charge. Step 1, condition. Determine the high time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your condition going into the week. Several factors go into determine the high time frame bias. However, there are only two options. Is either you're expecting the weekly candle to expand higher or you're expecting the weekly candle to expand lower. Step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It tells us when to look for a setup. We look for medium to high impact news drive to narrow our focus. We stock setup on calendar day and after the news release. The optimal days to trade this week were Monday, Tuesday, Wednesday, Thursday, and Friday. Every day this week was an optimal day to take a trade. Secondly, we look at what sets up your trade. What does it look like? This will be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and should be hunting long formations. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. The displacement leg must have a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in a sell program and should be hunting short formations. For our sell model, we want to see price trade above a key high, displacement lower causing a market structure shift. The displacement leg must have a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. Once the stage is set, when and how do you execute? For execution, we're looking to enter on a fair value gap or order block created in the displacement leg that caused the market structure shift. You have two options here. You can either enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap near the equilibrium of the range. You can also use the low hanging fruit option, meaning the one closest to price. Your stop loss will go at the swing high for a sell and at the swing low for a buy. You're always going to be targeting a 1 to 3. It's important to know that you can have both models form in a span of a day or a week, but your high probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First, we have time, the most important aspect of trading. At what time is the setup occurring? Range, where are we within the range? Are we in the upper, mid, or lower quadrant with respect to buy or sell? Liquidity, is there or does price create liquidity in front of the fair value gap or order block? Once price takes this liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves the 0.25 fib extension, I'm no longer interested in entering the trade. Trading is a solo sport. You have to make it unique to you and your personality. All of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just need to keep showing up on the chart and look for it. Now let's head over to the charts and look for it in price action this week. Welcome to Tracking IPTA. Price action this week was very interesting to say the least. I discovered that the sub will come in different shapes and sizes. However, as long as all the elements that are required are met, then I need to execute. Also, even though losses are part of the game, it's never fun. But I know my model will win more times than it will lose, so the numbers are in my favor. Also, I would like to give a very big shout out to all my female traders out here. It's hard for us. I was unable to trade half of the week this week due to severe menstrual cramps. I finished the week with a 2.7 decrease in equity. I lost $685 and overall we're still up on the account 26%, which is $6,570. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, okay? The most important tool you need to track down IPTA's movement. time. Now remember, even though I'm going to show you both buy and sell setups, it's important to note that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame condition is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against a high time frame condition. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going into this hunt with the understanding that you guys have already arrived at your high time frame conditional bias. This is a hunt purely for setups. To the hunt, let's go. Monday, June 24, we had an AM session buy formation that resulted in a 2% drawdown. Let's break it down. As always, we start with the economic news, and as you can see, we had medium impact news come out at 3 a.m. 9:30 to 10 o'clock opening range. We're not really trading. We're looking to see what price is doing. We trade below a kilo. We take liquidity below a kilo, displacement higher, causing the market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that took structure near the equilibrium of the range. We had the high form right here. The first discount array below 50% is the high of this BC right here. So you would have been tagged in this trade at 1028. You don't get to break even. You're taken out at 1043 for a total time of 15 minutes in this trade. Drawdown in this trade was 171 ticks for a 2% loss. Even though we took a loss, let's look at factors that made us a high probability setup. First, we have the time aspect is the AM session post 1010 check. The range, we're in the middle to lower quadrant, we're in a discount for a buy check. Liquidity, there's a short-term low created right here in front of the BC right here. We have liquidity created right here. So 3 out of 3 making this a high probability setup that netted you negative 2%. Remember, losses are the only thing promised to traders in this game. Wednesday, June 26th, trade of the day breakdown. We had the AM session sell formation. Let's break it down. As always, we start with the economic news. And as you can see, we had medium impact news come out at 10 a.m. We had price trade above a key high. We take liquidity above a key high. Displacement lower, causing a market structure shift. Multiple structures were taken. The displacement leg lower has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in a displacement leg that took structure near the equilibrium of the range. As you can see, the first premium array above 50% that we had was the consequent encouragement of this CB right here. So you would have been tagged in this trade at 1031. You don't get to break even. You're taking out 1154 for a total time of 1 hour 23 minutes in this trade. Drawdown in this trade was 151 ticks for a 2% loss. Sorry, this should say 2% loss. Even though we took a loss on this trade, let's look at factors that make this trade a high probability setup. First, we have the time aspect is the AM session and it's post 1010. Check. Range, we're in the middle to upper quadrant. We're in the premium for a sale. Check. We don't have liquidity quite created yet on this setup. We didn't take liquidity on this setup, but we do have 2 out of 3 matching to make this a high probability setup. And even though you took a loss, that is part of the game, guys. Okay, this is the only thing promised to traders. I did get in this trade exactly right here. I was tagged in this trade at 1031. I moved to break even when price entered this 4 hours BC right here, and we had this huge expansion back to the upside because there's a 4 hour BC. You're expecting bullishness in this area right here. So when price retraced all the way back up here, I moved to break even because it's a counter trend trade. I already took a loss on Monday. I need to protect my equity because capital preservation is the most important thing when I step in these charts. Okay, I have to protect my capital. And on counter trend trades, I like to be extra careful because it's a counter trend trade. Your probability of winning is low. So I moved to break even right as price bounced off this high time frame premium discount array because you're expecting bullishness. So yeah, I moved. This is where I lost the $20 at when I moved to break even. I guess it wasn't enough to cover, better than break even. That was Wednesday, June 26th, trade of the day. breakdown. Thursday, June 27th, trade of the day breakdown. We had a PM session sell formation. Let's break it down. As always, we always start with the economic calendar, and we had high to medium impact news come out in the morning. Lunch session start 1:30. We had price trade above a key high. It was the lunch session high. We take liquidity above the lunch session high. Displacement lower causing a market structure shift right here. Short-term low was taken. The displacement leg does have a fair value gap CB near the swing high, as you can see right here. We wait for a swing low to form to anticipate execution. As always, for execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. Above the 50%, the first premium array that we have is the high of this CB right here. So you would have been actually, this candle closure would have confirmed this swing low. So you would have been tagged in this trade at 147. Yep, so you would have been tagged on this candle. 147, breaking even at 159, taking out the same time as the break even 159 for a total time of 12 minutes in this trade. Drawdown in this trade was 15 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we have the time aspect, is the PM session. The range, we're in the middle to upper quadrant. We're in a premium for a sell. Liquidity, we have a short-term high right here created in front of the SIBI, and when price took it, as you can see, we saw immediate reaction to the downside, which is what you want to see once the liquidity is taken. So 3 out of 3, making this a high probability setup that netted you 6% for the day. We also had another formation form Thursday PM session. Let's break that down right now. Also, with this trade, this was the trade where I witnessed it happening, but I was waiting for this low to go before I entered the trade. But as you can see, there's still a short-term low. It does come take a short-term low below the key high. So this is where all the elements of the setup was required. So this was an entry where I should have executed, but I was waiting for this short-term low to go to enter the market. But you live and you learn. Let's break down the other PM session trade. Thursday PM session breakdown. We trade above the same high as the lunch session high. Price trade above a key high. Displacement lower causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg that took structure. As you can see, the first premium array above the 50% was the high of this CB right here. You would have been tagged in this trade at 326, breaking even at 448, same time as you're taking out the trade. Total time in this trade was 22 minutes. Drawdown in this trade was 14 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is the PM session. The range, we're in the middle to upper quadrant of the range. Liquidity, we have a short-term high created right here in front of the consequent encouragement of the CB, in front of the CB. We have 3 out of the 3 matching up to make this a high probability setup, and it edged you 6%. With this setup, so the first premium array above 50% is the high of this CB. However, since we have liquidity created above the high of the CB, you would have been looking to enter either at the high of this liquidity or at the consequent encouragement, which is right above the liquidity. So this candle either way would have tagged you in at the consequent encouragement or at the high of the liquidity. For me, if there's liquidity created in front of the setup, I would always look to enter at the high of the liquidity or the next premium array that's above that liquidity. So this would have been a consequent encouragement, hence why you would have been tagged in here at 326. Okay, this week was very interesting for me. I had to sit on my hands once again. It's harder to watch the market go without you, but it's getting easier because I know what I'm looking for, and if my setup is not there, I'm not entering a trade because I'll be going in blind, okay? And I don't want to do that. Once again, I want to give a massive shout out to all my female traders. It's tough for us when we have to go through the things that we go through. So I've learned on those times when I'm menstruating, I'm not gonna be in the market because mentally I'm not in the right space, and the pain is just too much for me to sit in front of my desk all day to look at these charts. I know my mother will repeat, I don't need to be at the charts 24/7 or every week. I don't need to be in the charts taking trades. I have to take care of myself first, okay? Thank you guys for tuning in this week. I almost didn't make it this week. That's why you don't see my face, but I made a commitment to myself and to my community, so I want to show up for you guys. So thank you guys for tuning in. I hope you enjoyed the tracking episode this week. Love to see you all back next week, okay? Every week we have shown you at least one or more opportunities that could have netted you at least 5%. With a 2% risk, if you had taken all 4 trades this week, you'd be looking at 8% for the week. But remember, we're only looking for one trade that will net us our 5%, and we're done trading for the week. As traders, we must be content with enough, and we must learn to limit our trade frequency. The less you're in the market, the less of your money it will take. I hope you guys found Trade of the Day insightful, and hopefully you enjoyed this one. Deciding to become a trader is the best decision one will ever make. It is the fastest way to build the life that you want. And too many of us fail at it. 90% actually. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There's a way to succeed at trading. Trade of the Day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.